Welcome back to the Profitable Mindset Podcast, everyone. Today we're going to be talking about simple habits for financial success.
Simple habits, I like that.
Yeah. Forget those get-rich-quick schemes. We're talking about practices that can help you, really help you, build that solid financial foundation.
Right.
Achieve your goals. And I think this is a great topic, something that everyone listening can, benefit from. So I was reading this book called 10 Simple Habits for Financial Success.
Yeah.
And it just really, really resonated with me, in terms of the advice that it gives. And it also highlights real world examples of people who've actually implemented these habits and have seen results. I'm excited to talk to you about this today, especially how those small changes that we make can have that massive impact.
Yeah, absolutely. It's not always about those drastic changes or, following complex strategies. A lot of times it's the simple things, those consistent habits that really move the needle. It's like compound interest, small regular contributions can lead to big growth.
Absolutely.
Over time.
I love that analogy, the compound interest analogy.
Yeah.
And that brings us to, I guess, the first chapter in the book, which is setting smart financial goals.
Yeah.
And the book really emphasizes this as a foundational habit. It's interesting, in your experience, why is that so critical?
It's like, think about it like this. If you're trying to reach a destination,
right,
how can you get there if you don't know where you're going?
Yeah, that's true.
So smart goals, they give you that clarity and direction. Instead of having those vague aspirations, you have very specific, measurable, achievable, relevant, and time-bound targets. It's not just about dreaming big, it's about creating that roadmap to success.
Yeah, and so it's not just about saying, I want to be wealthy. It's about, defining what that even means to you and setting those concrete milestones.
Right, exactly. And you know what I think is so fascinating is the psychological impact of SMART goals.
Yeah.
Because when you break down that large goal into smaller, achievable steps, it keeps you motivated. It keeps you from feeling overwhelmed. It's all about building momentum.
Right.
And then, celebrating the small wins along the way.
I love that. Celebrating those small wins along the way, because it's so easy to get discouraged when you're looking at that big, massive goal.
Right.
But if you're looking at the small and celebrating the small wins, just keeps you going.
Exactly.
Yeah. And the book gives an example of Elena, who was a trader, and she wanted to become more profitable. But her goal initially was pretty general.
Right.
But when she actually sat down and defined a SMART goal, which was to achieve a 5% monthly return by consistently executing her trading strategy, that's when she started seeing significant progress.
Yeah, and that's the power of being specific, It's about moving beyond those vague intentions, Creating that clear action plan. She didn't just wish for profitability, she set a tangible target.
Yeah.
With a strategy to achieve it, and that's what separates those who dream from those who achieve.
That's a great way to put it. It's that specificity. And, that kind of, in a way, leads us to chapter 2, which is tracking your finances daily. And this one, might sound tedious to some people, but it's about gaining that control and awareness of your financial situation, wouldn't you say?
Absolutely. Absolutely. Think about it like this.
Yeah.
It's about finding a system that works for you. Some people thrive on those detailed spreadsheets. Others, prefer those simple budgeting apps. The key is consistency, whether it's a quick check-in every day or you do it weekly. The goal is to understand where your money's going and make conscious decisions about your spending.
That makes sense.
Yeah.
The book also highlights the story of David, who was a Forex trader. And he actually improved his profitability by tracking his trades.
Absolutely. He was making a lot of impulsive trades.
Yeah.
A lot of them driven by emotion. But it wasn't until he started keeping track of his trades, he actually had a journal, meticulously tracking them, that he uncovered these patterns. He realized that his most profitable trades were the ones that align with his predefined strategy.
Right.
But those impulsive trades often led to losses.
That's so interesting, because it's like, sometimes we don't want to look at it. You know what I mean?
Yeah.
We're just kind of like, I made some money, I lost some money. But when we actually track it, we can see those patterns.
Exactly. Exactly.
Yeah, that's amazing.
It's not just about numbers. It's about understanding our habits and identifying areas where we can improve.
Absolutely. And then that kind of brings us to chapter 3, which is developing a risk management mindset.
Yeah.
And the book really emphasizes this, as a core habit for financial success. What are your thoughts on that?
I think it's really important. Think of it like building a house.
Okay.
You need a solid foundation if you want to withstand storms.
Right.
Ensure that long-term stability.
Right.
So similarly, a robust risk management plan protects your capital, allows you to weather those market fluctuations.
That makes sense. So it's like, when you think about financial success, we often focus on the gains and the growth, but it's interesting to think about the risk management as being equally important.
Yeah. Absolutely.
So the book also mentions the 1% to 2% rule, which suggests never risking more than 1% to 2% of your trading account on any single trade. What are your thoughts on that?
I think it's a great starting point. I really do, especially for new traders. It instills discipline. It prevents those emotionally driven decisions that can just wipe out your account. But, like any rule, it's not one size fits all.
Right.
More experienced traders with a high risk tolerance and they've got a proven track record, they might deviate from this.
Right.
But the core principle is still there. Define your risk tolerance and have a plan to manage those potential losses.
Yeah. So it's like there are rules, but the rules can, I guess, be bent depending on your situation.
You got it.
Okay. The book also talks about diversification and stop loss orders as kind of key components of risk management. Can you kind of elaborate on that?
Sure. Diversification is about spreading your investments, across different asset classes like stocks, bonds, real estate,
Yeah.
Don't put all your eggs in one basket.
Right, exactly.
By diversifying, you're reducing the impact of any single investment on your overall portfolio. And then stop loss orders, they're like safety nets. They automatically sell your investment if it drops to a certain price, limiting potential losses. So it really takes the emotion out of it, ensures you exit a trade before those losses become too significant.
Yeah. I like that analogy, the safety net. Because, we don't always know, what's going to happen. And so it's like, you're protecting yourself.
Absolutely.
Okay. That makes sense. So I guess that kind of leads us to chapter 4.
Yeah.
Which is plan every trade and investment. It's interesting because this chapter really emphasizes that, successful trading and investing isn't about luck. It's not about gut feeling. It's really about having that roadmap for every decision. What do you think are the essential elements of a solid trading or investment plan?
Well, you have to start by defining your goals, your risk tolerance. And then you need a very clear entry strategy. When and how will you enter a trade?
Right.
But equally important is, how are you going to exit? When will you take your profits?
Right.
When are you going to cut your losses? And don't forget about the position sizing. How much are you going to invest?
Right.
Based on your risk tolerance and the potential reward.
That's a lot to think about, but it's important to think about all of those things.
Absolutely.
Yeah. The book also mentions Liam, who was a long-term investor, and he attributed his success to actually sticking to a well-structured investment plan.
Yeah, he understood his financial goals. He knew how much risk he was willing to take, He knew his strategy. And his plan outlined his asset allocation, when he was getting in, when he was getting out, even his approach to market downturns.
Oh, wow.
By following that plan, he was able to achieve steady, sustainable growth.
Right.
He avoided emotional decisions that could have derailed his progress.
So it's like taking the emotion out of it.
Exactly.
And having that plan in place and sticking to it.
Exactly. It transforms, trading and investing from gambling into a more calculated process.
Oh, I like that.
And that leads us to the next habit, consistency and research and analysis, which is chapter 5.
Research and analysis. A lot of people, might get intimidated by that. How can we approach that in a way that's more manageable and effective?
Start by defining the scope. Are you focusing on fundamental analysis, examining the company's financial health? Or are you more into technical analysis, studying price charts and patterns? The key is to find reliable sources of information. Reputable financial websites, industry publications. You can even take educational courses. And remember, research is ongoing. It doesn't just stop, Markets are very dynamic.
Right.
Staying informed is really important for making informed decisions.
That's true because the markets are constantly changing.
Yeah.
The book also mentions a story about Mark, who was a swing trader, and he capitalized on a crude oil price reversal.
Yeah.
Pretty interesting, right?
Very interesting. He did a lot of research. He was very diligent. He was looking at market trends, identified signals, that suggested a potential price shift.
Oh, wow.
A lot of traders were caught off guard, but he was able to kind of see it coming.
Wow.
Because he'd done that research.
Wow. So he was able to anticipate the reversal and profit from it.
Yes.
Wow. That's a great example of, how research can really give you that competitive edge.
Absolutely. And this analytical mindset extends to reviewing your own performance.
Okay.
Which is chapter 6.
Reviewing your own performance. Why is that so important?
Yeah.
I think a lot of people overlook that.
Think of it like an athlete reviewing game footage.
Okay.
They're going to identify their strengths, their weaknesses, and areas for improvement. So similarly, by analyzing your trading and investing decisions, it helps you refine your strategy, identify patterns, and ultimately make better decisions in the future.
So whether you're winning or losing, there's always something to learn from that.
Absolutely. It's about turning our experiences into learning opportunities. Whether you keep a detailed trading journal, you analyze your investment statements, you simply reflect on your decisions. The goal is to learn from your success and mistakes.
I love that. It's the learning process. Because, a lot of times, we kind of beat ourselves up for the mistakes.
Yeah.
But really, it's the learning that comes from that.
Exactly.
Yeah.
The book gives an example of Rachel. She was a swing trader, and she actually significantly improved her win rate by reviewing her trades.
Wow. That's great. How'd she do that?
Well, she discovered a recurring pattern in her entry timing.
Oh.
So, just by tweaking her entry strategy based on her analysis, she was able to eliminate a common mistake that she was making.
Oh.
And she saw a noticeable improvement in her performance.
So just that one small tweak.
Yeah.
Wow. It's pretty amazing what we can learn when we just look back at our performance.
Absolutely. And speaking of optimizing your approach, Chapter 7 goes into diversification.
Okay.
We touched on it earlier in the risk management, but this chapter really dives deep into building a well-balanced portfolio.
Okay. Let's talk about that because, we talked about diversification, but, beyond just the basic concept of it, what are some things that investors should consider when crafting their portfolio?
I think it's important to understand correlation. How do different assets behave in relation to each other?
Okay.
For example, stocks and bonds, they often move in opposite directions. So when stocks go up, bonds might go down, and vice versa.
Oh, interesting.
So by including assets, with low or negative correlation, you're creating a portfolio that's more resilient.
Oh.
To those market fluctuations.
That's a good thing.
Yes, it is.
Yeah. Okay. So you're kind of creating that balanced ecosystem, right?
Exactly. And the diversification goes beyond just the traditional assets, like stocks and bonds. Think about real estate, commodities, even precious metals.
Oh.
These can all offer those diversification benefits and potentially enhance, your returns.
So like you're spreading it out across different areas.
Absolutely.
The book actually gives an example of Sophia, who weathered a stock market downturn because she had a diversified portfolio that included real estate and bonds.
Yeah, I love that example,
Yeah.
It really demonstrates the power of diversification in action. Her portfolio wasn't solely reliant on the stock market.
Right.
So when stocks declined, her other investments helped mitigate the losses. It's about creating that portfolio that can navigate different market conditions and achieve that long-term growth.
That's amazing. So even though one area might be down, another area might be up.
Exactly.
And so it kind of balances out, right?
It does.
Well, that's great. It's like spreading out the risk.
You got it. Yeah.
Okay. Well, I'm glad Sophia did okay in that downturn. And, speaking of things that we need to manage, Chapter 8 dives into managing emotions, which is so important, I think.
It is. It's so crucial.
Yeah. So, how can we become more aware of our emotions and prevent them from, kind of sabotaging our financial goals?
I think the first step is recognizing that emotions are just a natural part of this process. The trading, the investing process. Don't beat yourself up, for feeling fear or greed or impatience. It happens to all of us.
Right. We're human, right?
Exactly. The key is to develop strategies to manage them.
Right.
Things like mindfulness can be really helpful. Taking a few moments.
Yeah.
Observe your breath, your body, your thoughts. It can help you become more aware of your emotional state.
Yeah.
It's about creating that space between a feeling and a reaction.
Yeah.
So you can make more conscious choices rather than just reacting impulsively.
Yeah, it's that pause.
It's so important, that pause.
It is. It is. Another powerful technique is visualization.
Okay.
Before you enter a trade, you're about to make an investment decision. Take a few moments and just imagine different scenarios, both positive and negative.
Right.
Visualize yourself staying calm, focused, sticking to your plan, making those rational decisions, regardless of the outcome.
Right.
It's like a mental rehearsal for the real game.
I like that. So you're kind of preparing yourself.
Exactly. Yeah. Exactly. And sometimes the best strategy is just to step away.
Really?
Yeah. You find yourself getting caught up in the fear, the greed. Take a break.
Oh, wow.
Go for a walk.
Yeah.
Spend time with loved ones. Engage in those activities that bring you joy and clarity.
Yeah.
And then you can come back to it with a fresh perspective.
Yeah.
And that can often lead to better decisions.
That makes sense. It's like anything else. Sometimes you just need a break. You need to come back at it with a clear head. Exactly.
And I guess that kind of brings us to chapter 9, which is staying disciplined with a routine.
Yes.
And, routines are often associated with, I guess, mundane tasks, that we do every day. But in the context of trading and investing, they can be pretty empowering.
Yeah.
So why is that?
Well, routines create a sense of order and predictability. In a world that's often very chaotic, and unpredictable.
Right.
It helps us to minimize that emotional decision-making.
Right.
And helps us stay focused on the long-term goals.
And so what does a good trading or investing routine look like?
Well, it varies. Everyone is different.
Right.
But, generally speaking, it should include things like pre-market preparation, active market engagement, post-market review, and then also dedicating some time to education and skill building.
Right.
It's about having that structured approach to each phase of the process.
I see. So like before the market opens, when the market's open, when the market closes, and then also just ongoing learning.
Exactly. So, for example, your pre-market routine might include, reviewing overnight news, economic data. You analyze the charts, look for opportunities, set your watch list. And then during market hours, your routine might be focused on executing trades, monitoring your positions, managing your risk.
Right.
And then after the market closes, you review your trades, you analyze your performance, you update your journal or your log.
Wow, that's a lot to do. But it sounds like a good, way to approach it.
And then, of course, ongoing learning is so important.
Yeah.
So set aside time each week to read books, take those courses, attend those webinars.
Right.
Keep your skills sharp, keep learning and growing.
So it's kind of like a roadmap, that you're creating for yourself.
Exactly.
To, keep you on track.
Yep.
And I guess, routines, they can change as you evolve, right?
Yeah. Oh, absolutely. Absolutely. Routines are meant to be flexible. They're adaptable. Life happens.
Right.
Things come up, your needs and your goals, they're going to change.
Right.
So the key is to have a basic framework that provides that structure, that support, but you can adjust it as needed.
I like that. Yeah, because, sometimes you just need to kind of go with the flow.
Exactly.
But having that basic framework in place, I think, is important. The book also mentions Alex, who was a swing trader, and he noticed that his profitability actually improved when he incorporated a pre-market routine.
Yeah. Alex realized that he was making a lot of impulsive trades early in the day, just driven by, the news headlines or the volatility.
Yeah.
So by establishing that pre-market routine, he was able to kind of calm down. He'd review the charts, he'd plan his trades, he'd define his risk parameters, And that really helped him to avoid those emotional decisions. He approached the market with a much more strategic and disciplined mindset.
Yeah, and that's what we want, right?
Absolutely.
That discipline. Okay, and speaking of things that can help us, Chapter 10 talks about leveraging technology and tools.
Yes.
Which is, such a powerful thing because, technology has really revolutionized the way we trade and invest.
Absolutely, absolutely.
So, with so many tools available, it can be a little bit overwhelming to know where to start. What are some essential tools that you recommend for traders and investors?
Well, the tools that are right for you are going to depend on your needs and your preferences. But some popular options, include trading platforms like TradingView, MetaTrader, interactive brokers.
Okay.
They offer charting tools, technical indicators, real-time market data. They've even got those back-testing capabilities. You can test your strategies before risking your capital.
Oh, wow. So you can practice without putting real money on the line.
Yeah.
That's great.
Yeah.
Yeah. And then what about managing investments? Are there tools for that?
Yeah, you've got portfolio management software, things like Morningstar Portfolio Manager and Personal Capital, and they can help you track your investments, analyze your allocation, monitor performance. They can even help you plan for retirement.
Okay.
They give you that holistic view of your financial picture.
Right.
And then you can identify areas for improvement, make those informed decisions about your investments.
So it's kind of like, helping you manage everything in one place.
Exactly. That's great. So, and then the book also talks about staying informed about the market news.
Yeah.
Economic events.
Yeah.
What are some resources for that?
Well, you've got websites like Forex Factory, investing.com, Bloomberg.
Okay.
They're excellent resources, for real-time market data, news updates, economic calendars. All that can really help you stay informed and make those decisions based on current events.
So it's like, I guess with investing, knowledge is power. Absolutely.
Yeah. And what about tools for risk management?
Well, there's a lot of position sizing calculators.
Right.
They can help you determine the right trade size based on your risk tolerance and account balance.
Okay.
And then a lot of trading platforms have built-in tools for setting stop loss and take profit orders.
Right.
Which, automatically limit your losses. You lock in profits at those predetermined levels.
So it's kind of like, technology is really helping us to, automate like so many tasks that used to be manual.
Absolutely.
Yeah, freeing up our time and energy to focus on the strategy and analysis.
The key is to use technology to enhance your decision-making. You don't want to replace it entirely.
Right.
You still got to understand, the underlying principles of trading and investing.
Yeah, of course.
But technology can really be a powerful ally.
Yeah. The book also has a story about Emma, who was a part-time trader, and she was able to balance her job and her trading ambitions because she utilized automation tools.
Yeah, Emma, she used automated trading strategies to execute trades based on her own predefined rules, even when she was at work.
Oh, wow.
And she also set up alerts, so that she would be notified about potential trading opportunities, so she didn't have to constantly be monitoring the markets.
Wow, that's great. So she was able to kind of, do both, live her life and trade.
Absolutely. And, speaking of empowering yourself through knowledge, Chapter 11 emphasizes investing in continuous education.
Yeah, continuous education. So important, especially in the world of trading and investing.
Absolutely. It's constantly changing.
Right.
New technologies are always emerging, market trends, investment strategies.
Yeah.
It's so important to be a lifelong learner. Think about like a doctor.
Okay.
They have to keep up with the latest medical advancements. They go to conferences, they read research papers.
Yeah.
They're constantly expanding that knowledge base, so that they can provide the best possible care to their patients.
Right.
So traders and investors, they need to constantly update their skills and knowledge to effectively navigate those changing markets.
So what are some effective ways, for us to invest in our financial education?
There's so many resources available.
Right.
You can read books, online courses, webinars, podcasts, industry publications. You can even find mentorship programs. The key is to find, resources that align with your learning style and interests.
Right. And the book mentions Daniel, who was an equity investor. And he was initially hesitant to embrace technical analysis.
Right.
But eventually he incorporated it into his strategy, and it led to significant improvement in his portfolio.
He was a firm believer in fundamental analysis.
Right.
But he realized that just relying solely on fundamentals was limiting his potential. So by expanding his knowledge and embracing the technical analysis, he gained new insights into the market trends, identified opportunities that he was overlooking before.
Wow.
It's a great example of how being open to new ideas can really unlock new levels of success.
Yeah. It's about being open-minded and always willing to learn.
Absolutely.
And I think that's a great, kind of lesson for all of us.
Absolutely. And speaking of expanding our perspectives, Chapter 12 goes into the power of networking with like-minded individuals.
Networking, yeah.
Yeah.
Why is that so valuable?
You learn from the experiences of others.
Mm-hmm.
You share ideas.
Right.
You get different perspectives. Imagine you're trying to solve a complex puzzle.
Yeah.
Working alone can be tough.
Yeah.
But when you collaborate with others, you bring those fresh insights, and it speeds up the process.
Yeah.
So similarly, connecting with other traders and investors, it just expands your knowledge base. You're exposed to new strategies, and then you've got this support system of people who just understand the unique challenges of this field.
Yeah, because,
it's fascinating how each of these habits builds upon the previous one.
Yeah.
We've talked about setting goals, tracking our finances, managing risk, creating those plans, conducting that research, reviewing performance, diversifying our portfolios. And all of this leads to a crucial point: understanding and managing our emotions.
Yeah. It's so true, because we can have all the best strategies in place, but if our emotions are driving our decisions, it can all unravel.
Absolutely.
And Chapter 8 really dives into this, learning to manage emotions.
Yeah.
Something that I think every trader and investor can relate to.
Absolutely. Emotions, they're just a natural part of being human.
Right.
And they definitely play a role in our financial decisions.
Yeah.
The key is to become aware of our emotional patterns and develop strategies to manage them effectively.
Yeah. And the book talks about how, fear can cause us to hesitate or miss opportunities, or even sell at the worst possible time.
Right.
And then there's greed, which can push us to take on too much risk or hold on to a winning trade for too long.
Yeah.
And then see it reverse.
Right.
Wipe out all the profits.
Yep.
It's like this tug of war.
It is.
Between our rational mind and our emotional impulses.
Yeah. It's a battle that we all face. Think about it like this.
Yeah.
Our emotions are like a powerful engine. They can propel us forward with incredible force, but if we don't have a skilled driver behind the wheel, they can lead to crashes and burnouts.
Yeah.
That's why developing emotional intelligence in the context of finance is so important.
Absolutely. I love that analogy.
Right.
So what are some, practical strategies that we can use to manage our emotions, especially when the markets are volatile?
Mindfulness practices can be really, really helpful. Just taking a few moments to observe your breath, your body, your thoughts. It can really help you to become more aware of that emotional state. It's about creating that space between a feeling and a reaction.
Right.
So you can make more conscious choices rather than just reacting impulsively.
So it's that pause again.
That pause. Absolutely.
Yeah.
Another powerful technique is visualization. Before you enter a trade or make an investment decision, take a few moments to just imagine different scenarios, both positive and negative. Visualize yourself staying calm and focused, sticking to your plan, making those rational decisions, regardless of the outcome. It's like a mental rehearsal, preparing you for the real game.
I like that. So it's like you're practicing your swing before you step up to the plate.
Exactly. And sometimes the best strategy is just to step away.
Oh, really?
Yeah. If you find yourself getting caught up in the fear, the greed, take a break. Step away from the market, go for a walk, spend time with your loved ones, engage in activities that bring you joy and clarity, and then you can return to it with a fresh perspective, which often leads to better decisions.
Absolutely.
Yeah.
Yeah, sometimes you just need to step away, clear your head, and then come back to it. And I think that's great advice.
Absolutely.
Yeah. So speaking of, creating structure and, supporting good decision-making, Chapter 9 focuses on the importance of routine. Staying disciplined with a routine.
Yeah.
And we talked about routines earlier, but in the context of trading and investing, they can be incredibly empowering. Yeah. So why is that?
They create a sense of order and predictability in a world that's often chaotic and unpredictable,
Right.
And they help us to minimize that emotional decision-making and stay focused on those long-term goals.
And what does, a good trading or investing routine look like?
Well, it varies from person to person. It depends on your style, your goals, your time commitment, But generally speaking, it should include things like pre-market preparation, active market engagement, post-market review, and then also some dedicated time for education and skill building.
Right.
It's about having that structured approach to each phase of the process.
Okay. So like before the market opens, when the market's open, when the market closes, and then ongoing education.
Exactly. So for example, your pre-market routine might involve reviewing overnight news, economic data, you analyze charts, you identify potential trading opportunities, and you set your watch list for the day.
Okay.
And then during market hours, your routine might focus on executing those trades, monitoring your positions, managing your risk. And then, after the market closes, you can review your trades, analyze your performance, update your journal or your trading log.
Yeah. And don't forget the ongoing learning.
And of course, never stop learning.
Yeah.
Set aside time each week to read those books, take courses, attend webinars, keep those skills sharp.
Yeah, keep learning. It's so important.
Yeah.
It's a journey.
It is.
Yeah. So it's like, having a roadmap for yourself for each day or week.
Yeah.
Making sure that you're covering all the bases and staying on track.
Absolutely. And remember, routines, they're meant to be flexible, they're adaptable. Life happens, right?
Right.
Unexpected events occur. Your needs, your goals, they're going to evolve.
Right.
So the key is to have that basic framework in place that provides the structure, the support, but allows you to adjust as needed.
Yeah. So, go with the flow, but have that basic framework.
You got it.
And the book mentions Alex, who was a swing trader, and he saw a noticeable improvement in his profitability after he incorporated a pre-market routine. What did he do?
Well, he realized that he was making a lot of those impulsive trades, early in the day, driven by all those news headlines and the market volatility.
Yeah.
So by establishing that pre-market routine, he would review charts, plan his trades, define his risk parameters ahead of time, and it helped him to avoid those emotional decisions. He was much more strategic, much more disciplined.
Yeah, which is what we want, right?
Exactly.
Yeah. All right, and speaking of things that can help us, Chapter 10 talks about leveraging technology and tools.
Absolutely.
And this is so powerful because technology has revolutionized how we trade and invest.
It has. It really has.
So with so many tools available, it can be a little overwhelming.
Yeah.
What are some essential tools that you recommend for traders and investors?
Well, the tools that are right for you are going to depend on your needs and your preferences.
Okay.
But, some popular options include the trading platforms like TradingView, MetaTrader, Interactive Brokers.
Yeah.
They offer a wide range of features, charting tools, technical indicators, real-time market data, even those backtesting capabilities where you can test strategies before you risk your capital.
Yeah.
They provide a centralized hub for managing trades and analyzing market data.
I see. So it's like they have everything in one place.
They do.
Which is really convenient. And then for those who are focused on, long-term investing, are there portfolio management software options that you recommend?
Yeah. Things like a Morningstar Portfolio Manager, Personal Capital.
Yeah.
They're really, really helpful. They help you to track your investments, analyze your asset allocation, monitor your performance. They can even help you to plan for retirement. They give you that holistic view of your financial picture.
Yeah.
And it makes it easier to identify areas for improvement and make informed decisions.
So kind of like putting everything together in one place, you can see the bigger picture.
Absolutely. You got it.
Okay. And the book also emphasizes staying informed about market news and economic events.
Right.
So what are some reliable resources that we can use to kind of stay up to date on what's going on?
You've got financial websites like Forex Factory, investing.com, Bloomberg. They're excellent resources for real-time market data, news updates, economic calendars.
Right.
They provide a wealth of information that can help you to stay informed and make more informed decisions.
So knowledge is power.
It is. It is.
Okay. And what about tools for risk management?
A lot of online resources offer position sizing calculators. They can help you to determine the right trade size based on your risk tolerance and your account balance.
Okay.
And then a lot of the trading platforms, they have built-in tools for setting stop loss and take profit orders.
Right.
Which, can automatically limit your losses or lock in profits,
Right.
at predetermined levels.
And so technology is really helping us to automate so many aspects of our trading and investing.
It is. So it is.
Which frees up our time and mental energy to really focus on strategy, analysis, and the bigger picture.
Absolutely. Absolutely. But, it's important to remember technology is a tool. Yeah. It's not a replacement for understanding the fundamentals, of trading and investing.
Right.
You want to use these tools wisely and always prioritize sound decision making.
Yeah. And the book tells a story about Emma, who was a part-time trader.
Yeah.
And she successfully balanced her job and trading ambitions.
Right.
Because she utilized these automation tools.
Yeah, she used automated trading strategies, to execute those trades based on her predefined rules, even when she was at work.
Wow.
And she set up alerts to be notified about potential trading opportunities.
Yeah.
So she didn't have to constantly be watching the markets.
Wow. So she was able to kind of, live her life, go to work, and still, pursue her passion for trading.
Exactly. That's a great example of how technology can really empower us to pursue our goals, even with limited time or resources.
Yeah. And speaking of empowering ourselves through knowledge, Chapter 11 emphasizes investing in continuous education.
Absolutely.
Why is continuous learning so crucial in the world of trading and investing, especially in today's rapidly changing environment?
The financial markets are constantly evolving.
Right.
It's influenced by new technologies, geopolitical events, economic shifts, even social media trends.
Right.
And in order to stay ahead of the curve and adapt to those changes, continuous learning is essential.
It's like, a software developer who's constantly updating their skills.
Absolutely.
Or to keep up with, new things that are coming out.
It's all about staying relevant and adaptable in a dynamic field.
And thankfully, there's so many resources available.
There are.
Yeah.
Books, online courses, webinars, podcasts, industry publications, mentorship programs. There's really something for everyone. It doesn't matter how you like to learn, what your interests are, you can find something.
And the book mentions Daniel, who was an equity investor, and he was initially hesitant to embrace technical analysis.
Right.
But eventually he incorporated it into his strategy, and it led to significant improvements in his portfolio performance.
He was a firm believer in fundamental analysis.
Right.
But he realized, relying solely on fundamentals was limiting his potential. So by expanding his knowledge base, embracing technical analysis, he was able to gain new insights into the market trends, and he identified opportunities that he previously overlooked. It's a great example of being open to new ideas, and how that can unlock new levels of success.
Yeah. But it's about having that growth mindset.
Absolutely.
Always willing to learn and grow. And speaking of expanding our perspective, Chapter 12 dives into the power of networking with like-minded individuals. In a field that can sometimes feel isolating, connecting with others who share similar interests and goals can be incredibly valuable.
It can be.
Yeah. So how can we, connect with other traders and investors effectively?
Well, there's so many avenues these days. You've got the online forums, social media groups, virtual communities. It offers a convenient way to connect with people all over the world.
Yeah.
Local meetups, conferences, workshops, they provide opportunities for face-to-face interaction,
Right.
And then you have mentorship programs. They can provide personalized guidance and support for more experienced traders and investors.
Yeah. So, it's about finding communities and connections that really align with your interests.
Absolutely.
And that provide a supportive environment.
Yeah. And remember, networking is not just about taking.
Right.
It's about giving as well. You share your knowledge, you offer support to others, and you contribute to the community. It's a two-way street that benefits everyone.
Yeah, it's a give and take.
It is.
Yeah, and the book shares a heartwarming story about Maria, who was an options trader. And she significantly improved her risk management skills by joining a local trading meetup group.
Yeah, she was struggling to grasp certain concepts, but by connecting with experienced traders at the meetup, she was able to gain those valuable insights, get those practical tips, and she implemented those in her own trading.
Oh, wow.
And it really highlights how sharing that knowledge and learning from each other can really help us.
Yeah. It's a reminder that we don't have to go it alone,
Absolutely.
There's a whole community of people who are eager to help and share their experience.
Exactly. And speaking of, leveraging collective wisdom and streamlining our efforts, Chapter 13 explores automating good financial habits.
Yeah. Automation is becoming increasingly popular in personal finance. So how can we leverage this trend to kind of enhance our trading and investing?
Well, automation is all about setting up systems that work for you, even when you're not actively managing your finances. It's like having a personal assistant.
Okay.
Taking care of those repetitive tasks frees up your time and mental energy to focus on that bigger picture.
So what are some specific examples of things that we can automate in our trading and investing?
Well, for investing, you can automate those contributions,
right,
to your retirement accounts or your brokerage accounts. It ensures that you're consistently investing regardless of market fluctuations or emotions.
Yeah.
Imagine you're setting up an automatic transfer from your checking account to your investment account every payday.
Yeah.
It's like paying yourself first. You're putting your financial future on autopilot.
I like that. Yeah. Pay yourself first.
Exactly. You can also automate dollar cost averaging, which is investing a fixed amount of money at regular intervals, regardless of the price.
Okay.
And, this helps to reduce the risk of investing a lump sum, at a potentially unfavorable time.
So you're not trying to time the market.
Exactly. You're just investing consistently.
I like that. Okay.
And you can also automate rebalancing your portfolio. So you're periodically adjusting your asset allocation to maintain that desired balance between, stocks, bonds, other asset classes.
Okay.
It helps to ensure that your portfolio stays aligned with your risk tolerance and your investment goals. Even as market conditions change, it's like having a financial autopilot.
Yeah.
Keeping your portfolio on course.
I like that.
Even when you're busy with other things.
Okay. And then for traders, who are more active in the markets, how can automation, streamline their process and help them to manage risk?
Well, a lot of trading platforms, they have tools for automating order execution. So, you can set buy or sell orders that are automatically triggered at specific price levels.
Okay.
And this is especially important if you can't be watching the markets all the time, or you just want to take the emotion out of it.
Right.
So you can set your trading plan in advance and just let the technology execute those trades based on your predefined rules.
I like that. So it takes the emotion out of it.
Exactly.
Which is what we want.
Exactly. And to enhance risk management, you can automate stop loss and take profit orders.
Okay.
So, the stop loss automatically sells your investment if it drops to a certain price, so it limits your potential losses. And then the take profit automatically sells your investment when it reaches a certain price, so you lock in the profits.
Right.
It prevents greed,
Right.
You're not holding on too long,
Right.
So it's like having that safety net and profit target
I see.
built right into your trading plan.
It's taking the emotion out of, when to cut your losses and when to take your profits.
You got it. And you can even automate trailing stops, which is a more dynamic stop loss order that adjusts as the price of your investment moves in your favor. So it locks in profits while still allowing for further potential gains.
Wow. So it's like, a stop loss order that kind of follows the price upward.
Exactly. You're capturing more of the upside, but you're still protected from a significant downturn.
So it's pretty amazing what technology can do.
It is.
Yeah. And, it can create a more systematic and disciplined approach to, I guess, both investing and trading.
Yeah. It's about leveraging that technology to support your financial goals and create a more efficient and effective approach to managing your money.
Okay. And speaking of long-term thinking, chapter 14, practice patience and long-term thinking. It's such a crucial reminder that building wealth takes time.
It does. We live in a culture that glorifies instant gratification, quick fixes.
Right. But when it comes to financial success, patience and long-term perspective are essential.
Yeah.
It's about understanding that building wealth is a journey. It's not a destination. It's about setting realistic goals, developing a sound investment plan,
Right.
And sticking to it.
Yeah. And sticking to it, even when the market is, kind of going crazy, going up and down, it's about tuning out the noise.
Absolutely. And remember, time is your greatest ally in investing.
Yeah.
The longer you stay invested, the more opportunity you have to benefit from that power of compounding.
Yeah. And the book highlights that power of compounding, it's often referred to as the eighth wonder of the world.
It is. It's like a snowball rolling downhill. It starts small.
Yeah.
But as it gathers momentum, it grows exponentially.
Yeah.
Compounding refers to the process of earning returns, not only on your initial investment, but also on that accumulated interest or those dividends.
Yeah. It's like earning interest on your interest. It's that virtuous cycle that can lead to significant wealth accumulation.
And it's about letting your money work for you.
Absolutely.
Right.
Absolutely. And the key is to start early. Stay invested. Be patient. Don't get discouraged by those short-term fluctuations.
Right.
Focus on the long game and let that compounding work its magic.
Yeah. And the book gives a great example of Anna, who's a long-term investor, and she held on to a tech stock even during a period of underperformance.
Yeah.
And ultimately, she saw those significant rewards because the stock tripled in value.
Yeah, Anna, she believed in the company's long-term growth potential,
Yeah.
and she resisted the urge to sell when the market kind of turned against her.
Right.
Her patience and conviction were rewarded.
Yeah.
The company's fundamentals eventually caught up with its stock price.
So, she didn't panic.
Exactly. It's a great example of how staying focused on the long term can pay off.
Absolutely. And it highlights, the importance of having that long-term vision.
Absolutely.
Not getting swayed by the emotional roller coaster of the market.
Absolutely. And finally, we arrive at chapter 15. Celebrate milestones and adjust goals.
Yeah.
This chapter emphasizes acknowledging our achievements and making adjustments as we evolve. Things change, our circumstances change.
Yeah. And why is that so crucial? Celebrating our wins, making adjustments to our goals along the way.
Celebrating milestones, no
Yeah.
matter how small, it reinforces that positive behavior and keeps you motivated. It's like acknowledging those steps that lead to the marathon finish line. Take the time to appreciate your progress. Acknowledge those achievements, whether it's hitting a savings goal, paying off debt, reaching a new investing milestone, or just, sticking to your financial plan.
Right.
Take the time to celebrate.
Yeah. It's about acknowledging those small victories along the way.
Absolutely. Absolutely. And it's not just about celebrating those external achievements,
Right.
It's about acknowledging that internal growth, the lessons that we learn, the challenges we've overcome, the resilience that we develop along the way.
And it's about recognizing that, financial success isn't just about the numbers. It's about
Absolutely.
that personal growth and transformation that occurs along the way.
Couldn't have said it better myself.
Yeah.
And equally important is adjusting your goals as you evolve.
Right.
Your financial situation, it might change. You get a raise, you start a family, you experience some unexpected expenses. Your risk tolerance, that might shift. Maybe you become more comfortable with risk, or maybe you need to dial it back as you approach retirement.
Yeah.
And your priorities might evolve. You might decide to prioritize travel or start a business or maybe focus on philanthropic endeavors.
Right.
Life is constantly changing and our goals, they need to reflect those changes.
So it's a constant, evaluation, right?
Exactly. It's so important to reassess your goals and make sure they still align with your circumstances, your values, and your aspirations.
Right. And the book shares an inspiring story about James, who was an options trader, and he achieved his goal of a 20% annual return.
Yeah.
He celebrated his success, and then he set a new goal to challenge himself further.
He did. He didn't become complacent. He used that achievement as motivation to continue learning, growing, and striving for new levels of success. He realized that the journey is never truly over. There's always more to learn, new strategies to explore, new challenges to embrace. It really embodies that growth mindset, that belief that, we can continuously learn and improve.
Yeah. And it's about embracing the journey and, understanding that financial success is a process.
Absolutely. Absolutely. It's a journey that we can all embark on, one simple habit at a time.
I love that. It's incredible, isn't it, how these habits, they don't just impact our finances, but sort of ripple out into other areas of our lives.
Oh, absolutely. I mean, we're talking about a mindset shift, right? It impacts how we think, how we make decisions, our well-being overall.
I think chapter 13, automating good financial habits, that one really stuck with me. It's using technology, but in a way that really supports us reaching our goals.
Automation, it's a total game changer. It's like, imagine setting up dominoes, right? One little tap, and the whole thing just goes. You've got a system working for you.
That's a great visual, the domino effect. So if we wanted to automate, say, our investing, what could that look like?
Well, let's start simple. Automate contributions to your retirement account, your brokerage, whatever you use. Every payday, boom, money's moved, no second guessing.
It's like taking the emotion out of it, that temptation to skip a month or wait for a better time.
Exactly. You're in control, but it's consistent. And then there's dollar cost averaging, that fixed amount, regular intervals, smooths out the ride.
So you're not trying to be a market guru predicting ups and downs, just steady progress.
Precisely. And then rebalancing your portfolio so you're always aligned with your risk, your goals, like a financial autopilot.
All this sounds great for the long game, but what about traders who are more active, day to day?
Automation's got them covered too. Lots of platforms let you automate orders, buy or sell at specific prices, no emotional second guessing in the heat of the moment.
So it's almost like pre-planning your moves, letting the tech carry it out.
Exactly. And then for risk, automate stop loss and take profit orders. It's like you're setting boundaries, protecting yourself no matter what the market does.
It takes that gut reaction, should I sell now, out of the equation. I like that a lot.
Even better, trailing stops, they adjust as the price goes up, locking in profits but still giving room to grow.
Wow, tech's doing a lot of heavy lifting here. It's like having a super smart assistant looking out for you.
It is, but we got to remember, it's a tool. We need to understand how to use it right. Set realistic goals, make smart decisions.
Right. It's not about handing over all control, but using it to our advantage. And that brings us to chapter 14, patience, long-term thinking. The market isn't a microwave.
Exactly. Instant gratification. That's not the name of the game here. It's about the slow burn, quality assets, diversification, and staying disciplined.
I always like to think of it as, planting a seed. You've got to nurture it, be patient, and watch it grow.
Perfect analogy. Time is on your side. The longer you're in, the more that compounding effect works its magic.
Speaking of which, compounding is such a powerful force. People call it the eighth wonder of the world for a reason. How does that actually work in real life, long-term investing?
Imagine a snowball. Tiny at first, but as it rolls, it picks up more snow, gets bigger and bigger. That's compounding. It's earning returns not just on the original money, but on the gains too.
It's almost like money making more money, which makes even more money. But it takes time to get that snowball rolling, right?
Absolutely. Starting early is key. Even small amounts consistently can turn into something huge thanks to compounding. Remember Anna from the book, held onto that tech stock even when it dipped.
Yeah, she was a believer, wasn't she? And it paid off big time.
Exactly. It's that long-term vision, having conviction in your research, your plan, not letting emotions dictate when to bail.
That's a powerful story. It reminds me, investing, it's a marathon, not a sprint. There will be good times, tough times, but staying the course is what matters.
Well said. And then we wrap it up with celebrating those milestones, and adjusting our goals as we go. Life throws curveballs, things change.
I like that. Celebrating the wins, big or small, keeps the momentum going.
It does. And then being flexible with our goals, a promotion, starting a family, those things impact our finances, our priorities.
Well, it's like our goals aren't set in stone. They could evolve with us, right?
Precisely. A dynamic plan, one that adapts to our lives. That's what helps us live a meaningful life, not just a financially successful one.
That's such a great point. This has been an incredible conversation. Thank you so much for breaking down these 10 simple habits for financial success with us.
It's been a pleasure. I hope everyone listening feels empowered to start putting some of this into action one step at a time.
That's what I love about it, one step at a time. It doesn't have to be overwhelming, right? Small changes, consistency, those are the building blocks.
Absolutely. Financial success, it's not about perfection, it's about making progress. And that's something everyone can do.
Couldn't agree more. Thank you for joining us today on the Profitable Mindset Podcast. We hope you found this valuable, and we'll see you next time.
Keep those habits rolling, everyone.